Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 4th of September, 2019, getting on to 4:35 p.m. Central Daylight Time. Strong up day in the stock market. I'll get into all this in a minute. Huge up day in the energy markets as well. The gold market up, the dollar down, foreign currencies up strongly, and we saw stable bonds and notes with the yen slightly lower. It was a risk-on day. And it started, I guess, when mainland China pulled the plug on the idea of that extradition order for Hong Kong residents to be taken to the mainland for certain types of trials. Well, that prompted one event. Then we started seeing the services PMI come out today, and that looked a little better for things. I think the cap was in the UK, where Boris Johnson lost all the votes about leaving the European Union. And the combination just seems, with people coming back from the holiday, to kick everything up. And away we went. This is a strong performance day. Will it last? Well, that's going to be the big question for everybody. But we can see that the risk-on traders stepped back into the marketplace. Now, as you take a look at what the market's done, we can see that for the week, we're up 13.75 points in the S&P, and this is a weekly area chart of just closing prices. That's strong still. As you can see, we still haven't cleared this hurdle that I keep talking about. Will we? Don't know. But this area right here has been a lot of resistance. We've got a pattern of higher lows, higher highs. That is bullish. The market is over the 18-day average of closes. If I go back to yesterday, you would come back down, finish the day at 29.06 under the 100-day average, challenging the 18 again, closed over it. Today, you opened just over the 18 and popped back up. Now the question is, can we clear all this area? Where's the resistance? In that neighborhood, 29.59, let's call it, is the Bollinger Band top. Will the market be able to do anything with it? And if it does, you do realize you're not that far away from these all-time highs. And just getting over it doesn't mean anything. I'm just telling you where the resistance is. Why is a Bollinger Band important? Because the algorithm keeps the market trading within it 95% of the time. And yes, 5% of the time, the market can get ahead of the band, either way, to the upside or the downside. Recently, it's been more to the downside than the upside in the marketplace. In terms of momentum, you're overbought. So we have a market that's in an uptrend, that's coming back into a resistance area, and not coming back, it's in it. Resistance is right above the market, and you're a bit overbought. You just got to scratch your head here. As long as you don't take out 28.89, the trend of this market stays up. If that number's taken out, I suspect that a lot of disappointment hits the marketplace. It hasn't been taken out. The bulls have been able to control it, and the bias is still up. In terms of the NASDAQ, same battleground. That 18 to 100-day average, you cleared it today. Like the S&P, you've had a pattern of higher lows, higher highs. Can you get to the upper Bollinger Band becomes the key. And remember, staying over a band only 5% of the time. We're going to find out. I don't like that you're overbought as you're getting this rally in the market. When I come to the Dow, my eye goes to the overbought. You're still stuck within these Bollinger Bands. The market, like the other indices, came down yesterday, challenged its 18-day average of closes, came back up today, fighting at that 100-day. So I see the pattern. Now the question is, can the market do anything with it? And until it can't, the bulls have grabbed control. Nothing wrong with that. In the Russell, this is still the weakest of the indices. And so often you'll hear me say, the line in the sand, that 18-day average. Look at this market. All you did is come back to it today. So you've been fighting a battle. Still nothing definitive. Now let's assume this market can get up and close over the 18-day average or starts moving even higher from there. Well, the resistance is the 200-day average in the upper Bollinger Band. So I'm looking, even after that, the 100-day, I'm looking for a lot more resistance in the Russell than the other indices, but they all have that issue of either very close moving averages above or Bollinger Bands. In the VIX, the 100-day average, you're just whipping back and forth. If you're trying to make sense of this, you can't. It's just going up and down on you for the moment. The The bears grab control. We have the lower highs, we've had the lower lows, and momentum is pointing down, not oversold. So if the market drops, a potential target could be the 100-day average of closes along with the Bollinger Band, while resistance is the 18-day average of closes. Take out 2115 and everything, you got to go back to the drawing table. At least we can define where we're at. In the bond market, overbought in sideways action, doesn't seem to be going anywhere one way or the other. If we come to the 10-year notes, the upper Bollinger Band maintains that resistance point. Here's the market in an overbought condition. You need to have both numbers over 80 several days in a row to be embedded. You're clearly not there. So it's just overbought. Do we back off from here? If so, that probably gives the stock market some impetus. Does this last any period of time? Don't know the answer to that. September is notorious for stocks to not be in a favorable environment. Yet, as I pointed out to you, the seasonals up to mid-month are often to the upside in a number of these indices. It's the second half of the month that I get nervous about. When we come to TLT, we seem to be just getting a distribution top forming. And yeah, I'll use the word top at this point. It's just not able to pick itself up and make a run. You've got divergence with momentum coming down. You have not peaked out in terms of the bias. It's still upside, and you still have the pattern of higher lows, higher highs. I would say a tip off the market wants to break a bit more would be taking out 146.12. That would then give you that pattern where you get the lower and low, and that could stop upside momentum. In the dollar index, what the dollar index did is we know that it was over the upper Bollinger Band. On this day, the market closed right under that band. Here it was over it. So it's been fighting right there, as you can see. And that's how you finished yesterday at 98.95, let's call it. The band was 99.02. And today you followed through to the downside. So now you've got momentum pointing back down. And yesterday it was quite overbought. Support back at the 18-day average. The Bollinger top is acting as your resistance, and you are not in terms of a swing line with the trend because you've got a lower low, higher high pattern. Very difficult. In the eurocurrency, the fact that the UK is stuck to go back and ask for another 30-day extension, as I read what's gone on today, gives the market a bid because they're a step away from that problem. And keeping that step away rather than stepping into the mess is not what they want. So you get a bid into that market today off the lower Bollinger Band, right through here. Resistance back at the 18-day average of closes, but like the dollar index, you got a no trend pattern. You got a higher high and lower low. Certainly we had a breakout, and certainly there's still downside bias in this market alive, but you're correcting an oversold condition. In the British pound, you've gone from the Bollinger top to the Bollinger Band bottom. We talked about this just yesterday, and I said, watch out, you can do anything here, and boom. You're not trending. You're just whipping back and forth. This is a game not for trend traders in that particular currency. Now, the yen stepped into a downtrend, but it did it in an oversold environment. It's now got the lower highs, and if you look at this low right here, that low is 93.82.5, and the low on this day was 93.83.5. So we've got the lower highs, lower low setup, resistance back at 94.38.5, and if you're going to keep the downtrend in place, you cannot afford to get over 94.66. But again, you're oversold, and traders pay attention to that. Let's assume they don't. Let's assume the market gets more friendly type news. To the downside we go. By the way, when you come over here to the euro, keep in the back of your mind, France is trying to put together a deal for the Iranians on a $15 billion line of credit to buy oil so that they get some money. The problem is the Iranians want no restraints on that money, and to get it done and not get into U.S. sanction territory, France needs to get the U.S. approval. Do you see President Trump agreeing with that? When we come over to the Bitcoin, we have a lower low, a higher high. The market fighting at the 18-day average. I said yesterday I thought the downtrend had ended, and now you're just stuck at that 18-day average, which is very typical of markets that are looking to see what next do they want to do. Then we get to the energy market, which got a pop today. The fact that you had better service PMI out of Europe. The U.S. looked a little bit better as I saw it. The U.K. not as bad as it could have been. I think everything popped and markets all got a bit of a rally. But where did they go? You know what I'm going to tell you? The first challenge of the upper Bollinger Band is often where pros take money off the table. Well, today's high was 60.96. The Bollinger top is 60.70. And let's see, I'm sorry, the Bollinger top 61.02. You just missed it. You finished 60.70. So you can get to it tomorrow, but I see resistance right up at that number. In the WTI crude, if the rally continues, you still have the pattern of lower highs, by the way, and lower and low, then I'm still looking for this whole area, 57.14 to 57.92 to be a resistance zone. So maybe we've just come back from a holiday and traders are getting whipsawed around. I don't know. Gasoline, stuck 3 days in a row at that upper Bollinger Band. They can't seem to get through that number, and the lower band is holding the market in place without a trend. You have a higher high, lower low there. In that gas, we had yesterday just said, if it can continue, will the 100-day average of closes offer the resistance? That number's 241.60. It moved up to 241.30 today, and you finished 244.45, so you're over it. Will it stay over it? Got my doubts. Higher lows, higher highs. I do like the fact that the market came out of this sideways action. It's not been a short sale. I mean, all the way through, you've been over that, and then you develop the higher low, higher high. So the market is moving up, but I'm wondering if the pros aren't taking some money off the table up at this key level, and that's one of the things I'll be looking at. You know, one of the things I like to do with you is teach about technical indicators, and if you've taken my charting course, you know about these different ways to look at it. I mean, we're talking chart patterns, trend lines, and what this is a brochure that's been put together, and it's volumes 1 and 2 of technical indicators. You've heard of Gann lines, Fibonacci. If you haven't, learn about them. Money management, where it all comes in, getting an idea about price and time. The Arun indicator is one of those that I often show here, and it's explained in this whole way. How do you get this? And they're PDFs. It's really simple. They're free. Just go to our website. Click on free offers. You'll immediately be taken to a very simple page where you click off the offers that you want, sign up, and we get them out to you by email. Couldn't be simpler. You can also at any point click up here. If you're watching me on YouTube, it'll take you right there. In any case, I'm Ira Epstein. You have a good day, and I'll see you.